here, this one, volume high at the
There is a doubt in this retracement candle, sir. That is why I chose this one.
okay, there is a doubt in this retracement candlestick. Okay. So first of all, we need to understand this condition of the market. Okay. So there is a round number level. And
Yes.
this candlestick is a, if we take these three candlestick, try to understand.
Morning, evening star.
Evening star. That is also three candlestick pattern. Okay. Now, if we take only two, that is outside bar pattern. So if this one is the last stage of the market, this one, and market already hit this seller's entry point area. So when it hit the seller's entry point area, that means buyers are weak or stronger. Buyers are weak.
Weaker.
And there is a pressure from the seller side. And bullish candlestick, this one, and bullish candlestick volume is low here. So basically, invisibly, here seller's volume high, buyer's volume low.
Yes.
Why? Because of this area, the strong seller's entry point area. After that, see, sellers entered in the market very strongly with high volume. Okay, again high volume. So when market create that type of situation, you have to think that this one already starting point of the a very strong point by the seller side. That's why each and everything is now matching. What in situation matching here? That is the weakness by the buyer side from the round number level and a strong sellers with a strong volume, high volume. And next candlestick down. That means you have to think that sellers are now stronger. Okay. So when sellers are stronger, now suddenly buyers entered in the market. It's okay.
Yes.
Because level breakout happened. So when level breakout happened, it come as a retracement candlestick. Okay, now we can.
There is a viewer over here from here, and it has created a volume at push bar, a big volume at push bar.
Okay,
That's
just
why I got.
okay. I am explaining. See, try to understand one thing. This is a support level. Am I right?
Yes.
And this is the resistance level. Okay. So this is the support and this is the resistance. Who powerful here?
Sellers.
Sellers powerful here. And after that, in this area, who powerful here? Buyers powerful here. Sellers weaker here. But now sellers powerful, buyers weaker. So when opposite situation happening here, what may happen?
Next candle will be red.
Will be red, but we must focus on this point. Is there any extreme buyer's entry point area here? This one?
No.
No.
Yes.
No. Why? Why yes? Because it's only one reversal.
Okay. Yes.
One reversal. If it again and again reverse, that means bullish candlestick again and again reverse the market like this. What happening here? Okay. See, again and again reversing, and it's the third or fourth time market reverse here. So now this one is a strong buyer's entry point area, extreme buyer's level. But there is no that types of situation here. An opposite situation happening here. After weakness by the buyer side from this round number level, sellers strongly entered in the market with candlestick pattern, double candlestick pattern, triple candlestick pattern. After that, sellers again entered in the market. Both sellers are stronger. Now suddenly buyers entered in the market, they are weak. And if you calculate this point, there is a gap also here. And if this candlestick, see, these buyers tried best to break this resistance level, but it failed. Why? Because of this seller's pressure, because of this rejection. sellers push the market down and it closed as a bullish candlestick, weak bullish candlestick. So
Yes.
now this situation, today I will explain about this situation, double candlestick pattern, then it will be very clear to you, but try to understand. If we just observe the single candlestick patterns, so market is strongly falling down from here after creating evening star pattern and outside bar pattern. After that, buyers entered in the market, and these buyers are very, very weak buyers. So what we learned? We learned, suppose it's a level, if strong sellers entered in the market like this, after a breakout of any level, if buyers give us this type of candlestick, very weak candlestick, so it's an inside bar pattern in the downtrend market or in a strong situation by the seller side. So when it's a inside bar pattern, now we have to observe where is our level. Our level is here, that means here. Okay. Now we can observe the volume condition, and we have to take data from the delta river. Okay. Now we are observing what's happening here. So by this situation, this tell me the name of this bar.
So this is a push bar because volume is high at this area.
Okay. So it's a push bar. So it's a push bar. Volume is high exactly at this point.
Yes.
Now see the color. Which color this one?
It's a red color.
Red color. That means seller's volume high here. Seller's volume high here. So,
Yes.
and this is a inside bar pattern.
Yes.
Downtrend market pattern. So this is your confirmation that sellers will enter in the market, but you must place your trade from a safe zone.
Yes.
Okay. So try to understand oppositely.
I was confused because we have learned when there is a high volume, whether it is red or green, at the push bar level, then the next candle will be green. So that is why I was confused.
No. It depends on the market situation. It's a common theory.
Yes.
It's a common theory. What you are telling, it's a common theory. Just it's the push bar. Volume is high here. It's either red or green. Next candlestick up. It's just common theory. But in a downtrend market, how you think like that type of situation when buyers are weak?
Yes. Now I got it.
So don't apply any common theory, because I am not explaining like others matter like this type of common theory. I am just I am just giving you example in the chart, and it's a practical class. So I'm just giving you information from the chart based on market structure and movement with this theory. When you set any common theory in a practical market, that will change. The situation will change. Okay. So when you will write, try to understand. When you will write, suppose market strongly fall down like this. Okay. This is the first reversal, again market falling down like this. Again falling down. Now market came back to this type of round number level, and we already got the data that these sellers are very, very weak exactly at that point, like this one. Okay. And like this bullish candlestick, and this area, if we observe this round number level, we will get so many reversal, market fall down from that point. So now same here, market again and again reversed from this area like this, and goes up like this. So now market again came back to that area. After that, buyers entered in the market, and this is a push bar. That means sellers almost finish. Sellers are very, very weak. Where sellers are very, very weak? Sellers are very, very weak at the buyers area, a strong buyers
Yes.
area. What types of area? This one, a very, very strong buyers, extreme buyers entry point area. And from that area, buyers already entered in the market and it create a bullish pattern. Okay, it
Yes.
may outside bar pattern, it may bullish engulfing pattern, it may piercing line pattern, it may bullish harami pattern, and this candlestick volume is high at the open price or at the wicks. So now it's a push bar from after finishing the sellers almost done here. They they don't have much power in this area, but buyers are very, very strong in this area because we already got this data that it's a round number level and market already reversed so many times from that area. And then buyers again entered in the market and it already created a bullish pattern like this in outside bar pattern, like this morning star pattern here. And this candlestick volume is high exactly at the open price or wicks. That is the perfect situation. Now we can expect next candle up. But you think totally oppositely. You are just thinking this is my support and this is the volume is high here. So this is the push bar. Why next candle didn't goes up? Why market fall down? No, you thought totally oppositely.
Yes.
Sellers already entered in the market very aggressively, very strongly. And oppositely, this is your confirmation, extra confirmation by the buyer side that after a strongness by the seller side, market create here a very, very weak candlestick. Although this is a push bar or pushing in direction, so this will fail. It will fail. It will not work. And when you see the volume is high and this volume is by the seller side, now that is your another extra confirmation. Yes.
Yes.
More possibility next candle fall down. So now when and how you will place your trade, that's the main thing. Okay, so we have to observe the previous candlestick. So this candlestick and this candlestick. Okay, so this candlestick volume is high here. So now next can try to understand. Next candle, what happened? This is the closing price.
Yes.
Next candle little jump up. So you must take at least this candlestick 50%, or if you give market give you opportunity that this candlestick came for rejection from this seller's entry point area, that will be a very, very perfect situation for you. Perfect entry point, safe zone. You can easily place your trade here to the downward direction. Okay.
Yes.
So don't think only one side. You have to think both sides. Then everything will be very clear to you. I think it's now very clear.
Yes, sir.
Okay, so here this downtrend market and this candlestick downtrend market, this candlestick bullish candlestick. Okay, this one volume high exactly at the stop bar for retracement candle. Okay, yes, volume high exactly at the this is a stop bar. So and this candlestick is a inside bar pattern in the downtrend market also. So
Yes.
and market give you a very, very perfect entry point here. See, in this candlestick, this was your this area
High volume. Yes.
high volume, that
High
means POC, this one.
Yes.
So now observe the previous candle. See this one. Where is the POC? POC is exactly at that area. So now
Yes.
when this candlestick came for rejection, just place your trade from POC to the downward direction.
Yes.
Market will fall down and it will give you winning. Okay, here volume high exactly at the stop bar for retracement candlestick next candle rate. Okay, we saw this one. and this candlestick volume is high exactly. Okay, this one and this one. Stop bar.
This
Okay.
is the green candle.
Yes, so try to understand here that when suppose this is the POC here. Okay, this candlestick. And now this candlestick POC here. When this candlestick jump up, suppose this is a level. Breakout happened. So after breakout, here, this is a level. Sorry. No breakout, just this one. Now this candlestick exactly at the resistance level, below the resistance level. So if the next candlestick jump up little, now this area or this level will act as a support or resistance. Tell me please.
This will be the resistance area for that green candle.
So
After now it is acting as a resistance area because now it is going up. This will be the resistance area.
after breakout, when market below the level, that will act as a
Yes.
resistance
Area.
Okay, now after closing of this candlestick, next candlestick start opening and it little jump up and skip this level and start creating from above the level.
Then it will act as a support level.
Exactly. Now it's a support level. So if the total market pressure is a very strong pressure, then market may fall down.
Yes.
Like this. After rejection, market fall down like this. Or if we see there is no perfect pressure from the market and it's just not this type of aggressive movement here. So these two candlestick formed already, and next candlestick jump up and try to skipping this level. So if it really jump up and start creating above the level, so after rejection, more possibility market will go up. So now there is no SNR level here or here.
Yes.
But we know the volume condition. Okay. So
Yes.
when exactly at this area, it's the POC. So POC, that means it's a sub SNR. And what happened next candlestick, little jump up, and if this candlestick start creating above this level, so market may go up. Okay.
Yes.
But if you see there is no jump up, just market this candlestick close and next candlestick start opening from the same closing price of this previous candlestick, so then market will fall down. See what happened here. Basically market jump up. Why it not work? Because immediately there is another resistance level.
Yes.
when these buyers try to skip this area, the POC, to goes up, but immediately there is a resistance level. That's why when these buyers hit this resistance, sellers attack the buyers and it turned the market to the downward direction and push the market down. That's why it's a strong candlestick.
Yes.
So when you place your trade, just observe the opening price also from from which area the sellers or buyers start opening, and where is your POC at the previous candlestick. If that POC below and market jump up above, then it will act as a support. And when POC above, next candlestick jump down and market fall down. So when market, this is a POC, next candlestick jump down, then this area will act as a resistance area and it got rejected from this resistance point and market fall down. So that's the situation here. So when you place your trade, just observe where is your level, where is your POC, everything you have to follow. Volume high exactly at the stop bar. Okay, retracement candlestick. It's a very easy. After a breakout, sellers are very powerful, stronger, and buyers, market create a bullish candlestick, and that is a very, very weak bullish candlestick. It's inside bar pattern in the downtrend market, and this candlestick volume is high exactly at the wicks. So that means it's a stop bar, and that is a very, very perfected sheer short trade. Market fall down. Okay, so our today's topics about the double candlestick pattern when formed in the market. So how we can handle that type of situation? Suppose it's the basement of the market. It's the basement of the market. Basement, that means a ranging area that create any chart pattern or any something like that, anything that create a ranging situation or chart pattern after the market falling down. So when market start falling down, so that is a very, very strong situation here. So after this basement may any types of chart pattern. After that, very stronger. Sellers are very, very stronger. So when sellers are very, very stronger, definitely the powerful situation by the seller side. Now we have to observe the condition of the buyers. Suppose from this area, like this type of situation happen. Okay, so suppose there is a level here or level little above here. Market create that type of candlestick. So now tell me, what's the name of this candlestick pattern?
Inside bar pattern.
No. Inside bar pattern covered 50% level. Failed to cover 50% level, above 50% level.
Outside bar.
It's a dark cloud cover pattern.
Yes, dark cloud.
And this pattern is a downtrend market pattern. So when market create a very strong situation here by the buyer side, and sellers entered in the market and it creating downtrend market structure, downtrend market pattern. So that will fail. It will not work.
Yes.
So when you see this type of situation happening, it's a double candlestick pattern. It's okay, everything is okay, but the situation is not matching here. It's a dark cloud cover pattern. It's a downtrend market pattern, but market is strongly going up. So now what you have to do, you have to wait for next candle. If there is a gap, suppose there is a gap. So you have to take a confirmation that what happen in the next candle. So what type of situation may happen? Market may fill up this gap by creating another candlestick, or market came here, it got rejected. After that, market may goes up. If buyers again enter in the market, so it's a single candlestick pattern. After pullback, any strong bullish candlestick, so it will lead the market to the upward direction.
Yes.
Now, if we take these two candlesticks, it's a bullish engulfing.
Yes.
So when it's the bullish engulfing, now we have to observe several things here. So first of all, when market create this size candlestick and this resistance breakout happen, so now it's a major level or minor level? This one?
Minor level.
Minor level, exactly. So when it's a minor level, now breakout happen already. So, and the buyer's movement is a very strong movement here. So buyer's movement is a very strong movement, and first of all, it creates double candlestick pattern. That is the dark cloud cover pattern, but it's a downtrend market pattern. So that's why what we have to do, we have to wait for another candlestick. When market create another candlestick, that is the now bullish pattern, the uptrend market pattern. So first of all, what you have to do, you have to search this candlestick volume, POC. What is the POC? So if this candlestick, if this candlestick volume is high, open price. So exactly volume is high at the opening price or at the wicks. Volume is high. So that means it's a push bar.
Wow.
So if we take this one as a single candlestick pattern, that will work. If we take these two candlestick, it's a engulfing pattern. Now engulfing pattern volume is high exactly at this point. POC is here. So now we can expect next candle up. So when we see same situation at the last stage of the market, although it's a push bar, don't apply this strategy blindly. Okay.
Yes.
Just try to understand what happening, what the market structure, it will matching with the situation or not. If not, then avoid. Now, if we see this candlestick volume is high, if we take after pullback this strong candlestick and push bar, next candle up. If we see this double candlestick, it's a bullish engulfing pattern. It's a push bar, so next candlestick up. But if it's the last stage of the market and it's although it's a bullish engulfing pattern, we can expect next candle down. Okay, in the case of extreme sellers entry point area.
Yes.
So that time the theory totally changed. So now if we see this is a pushing in direction, that is also okay. If we see it's a stop bar, okay, stop bar here, volume is high here. So when we see it's a stop bar, immediately we have to check the
Level.
area, check the level. So if this is not only the level, the uptrend market structure, uptrend market condition. So when we see this is the situation, strong uptrend market condition and volume is high here, stop bar. So when this is the strong situation by the buyer side, although it's a stop bar, So market will continue.
Yes.
When it's a strong situation by the buyer side, volume is high at exactly at the POC is here. So next candlestick up. So when we see it's the last stage of the market, it's a stop bar, either it's a push bar, either it's a pushing in direction. So don't think like that next candle up.
Sir,
So
can I ask one thing?
yes, sure.
I have seen in some candles that in this area there is a red volume very high, above 100, and the
Yeah.
next candle, without any reason, without any level, it reverses after giving red volume over here in middle.
Okay, uptrend market condition or downtrend market condition?
In both, suppose we assume that this is the uptrend market and there
Yes.
is no level, but this candle creates a high volume that is above 100, a red volume bar over in the middle of the candle, and
Yes.
next candle reverses immediately for at least for one candle.
Next candle reverse.
Yes.
Is there any pattern?
I have not observed pattern, but I have observed the volume over here that is red
Okay,
in
each
blue.
and everything you have to observe. Okay, when the situation is like this type of, is there any pattern here or not? If this candlestick is a weak candlestick, this candlestick is a weak candlestick. This one
Yes.
weak, not so strong. Volume is high here, or volume is high here. Okay, so your situation was this is a strong uptrend market condition, and this candlestick, red color candlestick. So next candle down, that's the situation.
No, sir. This is the green color candle, but in middle of the candle, there is a huge volume of red candle, red volume, above 100. Suppose this is the green candle, and in this green candle, in the upward market, there is a red volume of 115 in this middle, and the next candle directly goes down. Red candle forms, next candle forms red because of this red volume in the middle.
Market condition like this type of.
Yes.
Okay. Market going up, suddenly this type of candlestick, and that candlestick volume is high at the middle of this point, and next candle down.
Yes.
So this volume is by the seller side.
Yes.
Okay. You must check the area.
Okay.
If you see the area is like this type of, then it may happen.
Okay.
Okay. So when you see any situation in this candlestick, this is the pattern by the buyer side or seller side.
The buyer side.
Buyer side, how buyer side?
So inside bar pattern.
Buyer side inside bar pattern, this one.
Oh, yes, yes. Green and red, yes. This is seller
This is
side,
also inside bar pattern,
but seller side.
but seller side, exactly. Downtrend market. And if it's a strong seller entry point area, although this candlestick middle or this candlestick below here, any candlestick volume is high. So this candlestick volume is high at the, that means it's the push bar.
Yes.
So when it's a push bar, can we think next candle up in this type of market condition?
No, no. If we forget about this area, Then no.
Yes, it's a strong seller's entry point area. That is one confirmation. Another confirmation, this is the bearish setup, dark cloud cover pattern. It's just a retracement candlestick. So, because 50% level breakout happened. So when market create this type of candlestick here, if volume is high, exactly at this closing point, it's a stop bar, then immediately place your trade to the downward direction. So when you see the volume is high at this point, so if it really a strong seller's entry point area, it will fail. Next candlestick fall down.
Yes.
So basically, you have to understand the market structure, market condition, and situation of the market before analyzing, before placing any trade. So when the market structure is a very strong by the buyer side, you just focus on the buyers, and sellers will give you weakness sign, and sellers will give you an information that buyers will, anytime buyers will enter in the market, and it will again lead the market to the same direction. So how? Because after this pullback, if we see this candlestick volume is high exactly at the this point here, closing point, POC. So next candlestick goes up. So when we see it's a seller's area, sellers is stronger here, and sellers already created a pattern here. So when we see this type of situation happen, and this candlestick is a bullish candlestick, but the pattern is a bearish pattern, you must focus on this area and this pattern. So when you see the inside bar pattern and 50% level is here, and this candlestick volume is high here, exactly closing price or weeks. So next candle down. In the uptrend market, suppose this is a strong uptrend market, but suddenly market create this type of situation. This is a strong situation by the seller side. So market will fall down. So don't take any common theory. Just try to apply with the each and everything with the market structure movement, and you have to take so many confirmations from the market also. So otherwise it will not work.